Hello, everybody. In the current affairs this week, the week ended 5th of May 2024. First of all, the Indian stock markets. The Indian stock markets across the week saw a lot of ups and downs, but net at the end of the week, they were by and large unchanged. During the week, the stock market reached the all-time high, but there were certain news reports which said that after the elections, the government might change the tax structure in India and it might resort to a uniform tax treatment to all different asset classes. Although there was a clarification by the finance ministry immediately that there is nothing of that sort in the mind of the government at this point of time. But whatever impact it could create on account of this news report led to a decline from the all-time high which the Indian stock markets saw this week. Moreover, the valuations of stocks in certain sectors and some stocks in particular was something which led to this kind of overall correction in certain stocks and sectors and certain appreciation in the sectors in which the market saw a lot of potential. To illustrate that, Nifty Auto, Nifty PSU Bank and Nifty Financial Services were up by around 2%, but Nifty IT was down by 2%. As far as the global commodity markets are concerned, Brent crude corrected sharply this week, which was down by more than 7%, and gold and silver also moderately or modestly corrected. As far as the US stock markets are concerned, Nasdaq was up by more than 1% and the S&P 500 was up by 0.5%. This week I want to talk about a moment in one of the stock markets in the world which was on a rise when all other stock markets in the world were in by and large a muted state. I am talking about the stock markets of Hong Kong and China. In last 3 months, the Indian stock market and the Nasdaq and S&P were up by around 3%. But the Hang Seng was up by sharp 18% and the Shanghai Composite was up by more than 13%. This was all in last 3 months, where both these Hang Seng and Shanghai Composite were sharply up. This is in contrast with if you look at the data of last 1 year. In last 1 year, Nifty was up by 24%, Nasdaq was up by 34%, S&P 500 was up by around 25%, but the Shanghai and the Hang Seng markets were down by 6% each. They were minus 6% each. So whatever has happened in last 3 months is something which is worth noting. Let's first look at the reasons why the Chinese stock market in last 1 year basis was so down. First of all, as we all know, the geopolitical reasons, the relations of China with the entire world. Then it got compounded with the way the local top business leaders were being treated. The realty sector in China never recovered after the COVID. It has its very deep-rooted problems which can impact even the banking system in China. This led to a lack of confidence of local and global investors in China. This lack of confidence led to slowing down of local investments and definitely global investments, and to a good extent flight of investments from China. So the Chinese markets and the Chinese economy suffered a lot. But this led to the valuations of so many Chinese stocks and the stock market in general becoming attractive. So quite a few investors who are on a lookout for bargains found the Chinese stock market quite attractive, and valuations of certain stocks and valuations of the market as such definitely matter. All the negatives of China still remain, but the valuations looked attractive, and this attracted allocations in the Chinese stock market. The another factor which was to the favor of the Chinese stock market was China has a very strong leadership in artificial intelligence AI. All the AI stocks across the world appreciated a lot, and the Chinese stocks and the Chinese stock market did not appreciate, but the world started acknowledging the leadership of so many Chinese companies in artificial intelligence. Meanwhile, China announced a stimulus package, and the fact remains that even today, after at least a few years since manufacturing has slowly started shifting from China to across the world, the fact remains that China is a leader in manufacturing, and so many of the products, base products and finished products, are still under the grip of leadership of China. So all these factors led to the rise in the Chinese stock market. The lessons to be learned from whatever is now happening on the Chinese stock market is that valuations of market and stock do matter, and even when there are quite a few negatives of some markets, if the valuations are attractive, then monies can flow into those markets. And the other way around, if the valuations are very high, despite the fact that the fundamentals of an economy or the country are very good, this might lead to fresh investments, especially by foreign investors, not coming to that destination. And I'm talking about India. So we all need to be cognizant of whatever is happening around us as far as the way the winds are blowing. Thank you.